Welcome. It's 2 minutes past the hour, so it looks like we are gaining still quite a few attendees. Certainly, if you don't mind, we'll give it another minute or two while everybody joins, as it is, the numbers are growing. So give us a minute or two. Stabilized, although, as I said that, we had another little bunch of people join up. So let me just start off and say that we'll do a short intro for those investors that are new, and we'd like to welcome especially those investors that have come from Alec. Alex, thank you very much for recommending us, and thanks to all of you that have joined us from Biz News tonight. So if you're an old investor, and we'll go through 5 or 6 minutes of explaining what OrbVest is all about, so go and get a cup of coffee in the meantime. I'm sure you don't want to hear it all over again. But it looks like we have stabilized, approaching 100 delegates, so that's fantastic. So yes, just to welcome to OrbVest again and to welcome you all tonight. We will be talking tonight, and Machiel will take you through our new investment opportunity, Medical 27. Pretty crazy if you think about it. We're sitting in the middle of this crisis, and we are launching an investment product. I think you can understand that the amount of people that registered for this webinar tonight, there is still an exceptional appetite for people that want to invest in something secure and safe that is offshore, that is producing regular dividends. And I think this is case in point. That is why we are launching this product in this market. So then we'll get Martin, in fact, we'll get Martin beforehand to tell you a little bit about medical, the sector, and give you a little bit of information about what's happening in the US. He sits in New York, but we'll do his intro in a moment. First things first, we live in a world full of compliance. Bear in mind, we do look after other people's money. So let me tell you what we aren't. And Machiel, if you can go back a slide, thank you. The information and the content that we share with you this evening is for information purposes only. Any investment that you make in light of these ideas or these opinions or forecasts are expressed and are committed at your own risk. Our past performance, while it is fantastic, may not be indicative of future results. The information that we share that is of a legal, tax, or investment nature certainly shouldn't be taken as advice, and you need to go to a third party, your financial advisor, lawyer, or whoever to get that advice and to verify what we are telling you tonight. Thank you, Machiel. So again, on the compliance issue, we file under Reg 506C in the US with the SEC. So investors can come in directly into the US. If you're in South Africa, and I think we are gearing this presentation towards South Africa today because the majority of our investors online are South African, we operate under FSB license 41690 in South Africa. But let me tell you what we are. So basically, we are a global real estate company. We invest in these stable income-producing assets in the USA. We don't speculate. We don't go after development product. We find these profitable buildings that can pay out a dividend from day one, and we acquire them and then get people to come and co-invest alongside us. We have an absolute hyper-focus on medical, and we'll tell you a little bit about that as we go through the presentation. So before Martin kicks off, let me tell you a little bit about Martin and the team. Normally we'd spend a little bit more time on it, but first of all, I'm going to start off with our chairman. Henny Bezuidenhout is a very interesting character. He's been around the medical scene in South Africa for more than 30 years. He has probably one of the biggest private portfolios of medical buildings in South Africa, including some of the hospitals that you may go to, depending on where you live in the country. But he has a fantastic reputation, and ultimately, the reason why OrbVest exists is because Henny was looking to offshore his business and his assets, and he looked at the world, the global stage, and filtered through a funnel effectively where would be the best place in the world for him to expand his business to. And that is what Martin will lead us into. few other people on the call today. Machiel, who will take you through Medical 27. And I like to share the information he hates everyone to know, but he is our resident engineer. He worked for Siemens for many years before he discovered the magic of real estate. And he was involved in installing the transformers for Medupi power station and others. Yeah, just don't hold that against him. He was, he spent a lot of time with Siemens, and interestingly was based in Atlanta in one of the buildings that we acquired, and that is quite coincidental. Machiel is involved in traveling around the US and looking at buildings and kicking the tires before we acquire them. He also is a vital cog in the organization as far as presenting to the investment committee. Let me give you a bit more information about that. We have to take every deal that we package to an investment committee. The key members on that investment committee are completely independent. One of them I do need to mention is David Vandrach. David is well known in the property circles in South Africa and in banking circles, might I add. He was a director of two major banks. I think I can mention them, Investec and RMB. While at RMB, he was the head of risk and was responsible for founding Ashburton and RMB REIT. He has, for most of his life been involved in risk management, as I say, at these two major banks. So he is accompanied by Alan, and Alan also is regarded as Mr. Fix-It in the commercial property sector in Johannesburg. Certainly when institutions come across a particular project or property or development or mall that has a problem, they have historically called him in to come and fix it. So these key individuals are very important in our world, and make sure that anything that is released to the public is highly vetted and highly curated. So I think that's the team. If I can hand over to Martin, sitting in the USA. Martin.
Thank you, Justin. And before we move on to any of the information about OrbVest, one of the other humble members of my executive team is Justin Clarke. He eloquently introduced himself, didn't mention his past experience and CV. And Justin is well known for starting private property in South Africa, and then took the business across Africa and then sold out. And he's had a number of other very successful startups and ventures in his career. So really, OrbVest, you understand, is a global real estate company. And what we do is we raise equity from around the world, but we only invest into the United States and with a hyper focus on healthcare. And we'll get into why healthcare. But I think the starting point is really the roots of OrbVest. And it was really the team coming together very much like everyone on this webinar tonight, who were seeking to externalize their money, or at least invest their money into assets and in a country where they could earn decent dividends, hopefully in dollars, and really feel like they are in something that will grow their wealth long term. And so that's the reason why we have a very successful strategy that is starting to grow across so many different countries. We're now raising equity in over 10 countries, and that continues to grow because everyone around the world, we've discovered, has the same desire. They all earn money, they create money, they want to invest it from their country, hopefully into a first world country, and United States is a great home for that. And with our reputation now going on for 6 years, where we in our healthcare portfolio have never missed dividends, we've consistently generated 8% cash on cash for people on an annual basis. And then total returns, we set ourselves a goal of between 11 and 17% per annum. It's quite phenomenal. And what that is, just to explain further, is people earn 8% in your annual dividends, cash on cash, that's paid out quarterly. And then when we sell the building, we make a profit, and that equates to another 4, 5, 6% per annum. And so you get your 8 plus your 4, 5, or 6, and hence you get US dollar returns in the double digits. So that's a bit of the history to OrbVest. You know, without further ado, I also want to just bring you up to speed on my experience currently in the United States. I'm here. I immigrated here a few years ago specifically to head up OrbVest globally. And the situation is that New York is still in stay-at-home shelter, which means that we are not able to actually move around. Unfortunately, while it may be draconian, it certainly is not as draconian as South Africa in terms of a complete military lockdown. And so the good news is that from New York, it certainly is a movement towards not the infections anymore and the deaths, but more around how we open up the economy and how we're able to move forward and actually get things going. The good thing also is that in the US, it is the most phenomenal scenario to see the power of a coordinated government where they literally can boost the economy through $2.2 trillion worth of stimulus packages. Whilst the unemployment rate has sparked to 14.7 million people, there is also common consensus. A lot of those people were furloughed, which means that basically they were put on short time or they were told to stay at home until the businesses get back up and running. And so a large portion of those people, certainly we believe, will be re-employed quite quickly when things move back to some kind of normality. So just talking a bit about healthcare. Why exactly did OrbVest choose healthcare? The answer is pretty simple. We like to say to our investors around the world, think about your doctor or your dentist. How many times do they move in 10 years? The answer is pretty much wherever we go around the world, it's once or never. They're very stable tenants. They're well-known tenants. They're profitable tenants. And therefore, you end up with a medical office building that is an ecosystem whereby they all are a destination center for their clients. And so these buildings are incredibly stable. Most of the buildings we acquire have been there probably for 10, 20 years, and will probably be there for the next 10, 20 years. So for South Africans and other investors around the world, it gives absolute stability in a country that's growing and a country that's doing well up until the last 2 months, and a country that continues to do well. As far as OrbVest goes and our strategy, we've been saying consistently for 6 years that if and when a correction or a recession arrives, we believe most investors will want to be in healthcare because of its recession-proof nature. If you ask Henny and his portfolio in South Africa and his experience around the world, he will tell you with absolute confidence that in all his years of running his businesses and his medical office buildings, he's never lost a tenant that is material in a downturn. They remain profitable and they remain very resilient. And so if we look at the performance of OrbVest over the month of April versus the various other asset classes in the world, which consists primarily, if you look at real estate, in terms of multifamily, commercial, retail, and self-storage and other asset classes, the one thing that you can certainly assess already is that healthcare seems at this point to be performing a lot better than most other asset classes. And we are relatively unaffected compared to others. Everyone's going to be impacted, but maybe we just might be a little bit less impacted. So if you look at hospitality, it's pretty much shut down at the moment around the world and will struggle to get going again because of travel. If you look at retail malls, we know and we understand the impact. And if you look at multifamily, that's maybe also going to be impacted, not as much. We're not sure yet. Certainly job losses will have some kind of impact. What this slide really shows is that if you take our investments and you take the fourth column from the right-hand side, it shows a normal monthly rental of 2.8 million. It shows then what we collected in the month of April. So if you compare April to March, you will see that we basically collected 95.3% of our normalized rental, which is astounding. It really does validate our strategy so far. The number of tenants who have possibly asked for any kind of referral or deferral or abatement, those kind of tenants are your smaller type GPs and maybe a dentist. They don't take up much space in the building. So while they might ask for a little bit of reprieve, it's not a material number. I must also just mention to everybody that should we grant it to anybody, that is not a rent holiday. It is purely a deferral of your rental to later in the year. Most of those tenants have already indicated to us that the moment they get up and running in June onward, they're happy to pay the arrears. So we are still comfortable that we will collect almost all of those arrears by the end of the year. What you then see is that the movement into May, we expect it to be the real month when a lot of people start to feel the pain. And that is showing that we will still remain at 92% of normalized rental. And then going into June, we expect a strong rebound as the economy starts to pick up again and our tenants get back to their normal type of running. I also want to remind everyone that medical is deemed an essential service. What that means is that most of our facilities remain open. They are not allowed to actually shut. If you look at some of our buildings, Medical 25, we have Life Hope Labs. They are in fact the designated coronavirus testing center for the state of Georgia, and multiple other scenarios where they treat, for example, patients with various sicknesses. You know, we've got also oncology centers, and those kind of centers have in fact increased in patient numbers because the US has asked patients to move from the hospitals to the medical office buildings so they can stay away from any positively infected patients. If we can just go to the next slide. So really what that means as we move forward is we believe that we are now in a very resilient asset class. We believe that we are very relieved and proud to have people's money in this, where they are safe from what's happening in the world. And in fact, most people in the world are still looking for a safe haven to put their money, to invest it. You can't just keep it in a bank for the next year. It's not generating anything for you. And so we really do offer a very viable alternative. If we talk about the actual strategy of healthcare, we just want to go through this very quickly. And we spend a lot of time at OrbVest focusing on what exactly is happening in the healthcare sector, because healthcare is not just healthcare. It crosses many different aspects. There's various segments within the healthcare niche. And so really, we look at the strategy. Henny goes over on an annual basis. We go to conferences, and we've seen there's a distinct movement happening through the entire world with disruptive technologies in terms of specializations, DNA coding, genome sequencing, and integration. These kind of drivers are absolutely going to impact healthcare as we move from a dispensation of sick care to healthcare. This slide just highlights where exactly we invest. And so for a lot of people that have done business with us over 6 years, they know where we invest. We invest primarily in states that are underpinned with great fundamentals. Number one, first and foremost, is population growth. We go towards states like Atlanta, Georgia, and the tri-state area towards New York. And then as we move down towards Atlanta, Georgia, and into Texas, Texas has been great for us. All the fundamentals stack up. People have a perception that it's based on oil. It's not. It used to be many decades ago. Nowadays, it is a very diversified, buoyant economy with enormous inflows of people immigrating there and moving there. And then as we move forward, there are 3 or 4 other states that we really want to focus on. The first is obviously the area around Denver, which is really proving to be incredibly positive and strong at this point right now, followed by other states like Arizona, and then into Florida, and then into Carolina. And these kind of areas, we believe, meet the fundamentals of what OrbVest, and most importantly, our investors are seeking as we move forward, which again is all about where can I just put my money into diversified states in the US where I know it's going to be safe and I'm going to get a good, sustainable return. In terms of one of the niches that we're going to talk about tonight, we're now going to move into a new segment, which Machiel is going to expand upon. And we believe it's incredibly resilient. The one thing in the US, healthcare is expensive, but 93% of the entire population is covered on their healthcare costs through either private healthcare, very similar to South Africa, or what you've heard about called Medicare and Medicaid. And so the one thing that we all know in America is what hospitals and insurers want, or specifically insurers, is they want to get you out of the hospital as quick as possible when you have an operation. It's incredibly expensive. So the moment you've had an operational procedure, you will then go to what's known as post-acute care. It can range from being at your home all the way through to the left-hand side, which is more extreme, into hospice and various other facilities. But the one thing we do know is that if you look at the centerpiece, which is the Inpatient Rehabilitation Facility, it's the one that we believe is really housed by dominant tenants. You'll hear about some of those tonight. And it is a place where people go to recover, where they might go to have physiotherapy for a couple of weeks after they've had some kind of operation. And it's incredibly resilient. And so we believe that, as we say, future-proof your income. These kind of facilities and these kind of tenants are not subject to technological changes and disruption going forward. So I'm not going to go through much of what exactly they do in it. I'll allow Machiel to cover that. Just a bit about Machiel. It's important to note that Machiel, since 2014, has been acquiring and purchasing and managing buildings in America for South Africans and people around the world. He has an absolute wealth of knowledge, and he's been doing this successfully and built up a portfolio. Our portfolio now stands at over $300 million US and growing by $150 to $200 million a year. So we believe in the short term, we'll be achieving a portfolio of over $1 billion going forward, and that's from all the various countries in the world. This slide just shows the various segments we've played in so far. You can see the bulk of it is the outpatient facilities and medical office buildings, which is in red. And that's where people essentially go to our kind of facilities, and it plays a very big role. And it's becoming very prominent, not only in the United States, but around the world. People don't really want to go to hospitals. They want to go to more niched facilities where you just feel more comfortable there. The second segment is the one in blue, where we're now going to look at additional type facilities and post-acute and various other niches over time. But that essentially is what OrbVest does, and that's what we look after. Thank you.
Yeah, thank you, Martin, for the introduction. Yeah, I've had the privilege now to really look at these buildings for the last 7 years. We've got a fantastic team of administrative persons. We've got feet on the ground with Andrew in Atlanta. That's going to expand now. We've got a fantastic legal team, financial team. So it's really a team effort. And yeah, we have the privilege to simply talk about these opportunities and bring that together, and really the months of hard work that really culminates into bringing a product to the market. So the product that we're introducing tonight is Medical 27. And yeah, I think we are really, really blessed by having this type of product in this environment. We planned on it already in December. We expected to have, in the calendar year 2020, a bit of a correction in the United States based on our investment committee meetings, but we didn't expect the black swan as we're all experiencing currently. But nevertheless, we're very proud to bring this product, and you'll see why it actually is quite a good fit for this environment in the first place. So what is Medical 27? It's the first time that we're bringing the Inpatient Rehabilitation Facility in Texas to the market. We're also introducing our new, very strong partner, Lincoln Harris, which has managed well over 750 buildings across the United States for the last, I think they opened in 1997. And yeah, so it's a formidable team that brings you this investment. We are going to raise 8.7 million. I'll go into the figures just now, and I think you'll see why we're so excited about this project in the first place. So first of all, the location. I think Martin alluded to Texas, and Texas as a whole has really been absolutely buoyant in recessions. When I started off, when we first went into the Texas domain, we actually researched the 2008 GFC, and we found that Texas virtually had no impact. And one of the key reasons for this is that Texas is really an absolute business state. First of all, it doesn't have tax on the local level. It means no state tax, only on the federal level or countrywide. So that brings a huge impetus to big corporate employers to bring their employees to the state of Texas. It's also an at-work state, so it means that they can hire and fire as they like, and as a result, they're very fluid with their labor laws and their labor skills, and we've seen that. And they also react extremely quickly to market changes, and also when it changes again, they react again positively, and that has resulted in a very buoyant state. And just to give you an impact of size, the GDP of this state is 16th biggest GDP in the world. It beats France, and just Dallas-Fort Worth alone is bigger than South Africa's GDP. So just give you a bit of a feel for size. Zooming a little bit into Dallas-Fort Worth, this metropole is absolutely the center of economic activity. It's a well-diversified economy. It's really got more than 10 sectors that it's diversified in. And yeah, just to give you a bit of a orientation, here's the Dallas-Fort Worth Airport. These are the ring roads, very, very sophisticated ring roads, infrastructure in place. But what we particularly like is this infrastructure going north on the 75 and on this highway here called the $5 billion mile. So this is, in our view, by far the most development activity for the last 5 years in the US. And so there's been absolutely vibrant growth. I've been up here a few times, and it's just unbelievable, the expansion. So with our previous acquisition, Medical 26, we bought it right over here, just below the growth area. So very happy with that. And now we're bringing this opportunity, which is slightly north in this area called Richardson, and it's still pretty much part of the growth phase. So as you know, one of our key criteria is that we would like to ensure that we are in the right market and in the right location. And we've seen that with the population growth, etc., and that really just affects the property prices and also evaluation, which is one of the risks that I'll address a little bit later. Here is just a quick overview of Lincoln Harris. They're a very large group in the United States, and they consist of the Lincoln Harris Group per se, and then a specific subdivision which is called Corporate Services. This Corporate Services is then this acronym CSG, and this department is only managing healthcare properties. And as it would be, they are located less than 30 minutes away from both Medical 26 and Medical 27. So we're pretty much in their backyard. They've been across most of the states. So we're very, very happy with such a strong partner. The executive team is also part of the deal, and I'll explain that in a bit of detail. But the star of the show is really the tenant in this case, which is Encompass Health. I'm going to talk about it a little bit in a lot of detail just now, but needless to say, as a landlord, getting $43 per square foot, 100% leased for a lease term remaining of 13 years, with 2 additional 10-year extension options. Guys, this is phenomenal. We've done our research with external consultants in the rehabilitation center per se, and we found that these type of facilities have really got a lifetime of 40 years plus, and this is still only roughly about 8 years old, and so as a result, we really have caught it right in the beginning of its lifetime. So as you can see, the tenant itself is called Encompass Health. It's got a huge portfolio, which I want to outline a little bit in the next slide. They are a New York stock listed company called Encompass Health Corporation. We've looked at this strategy, really looked at it in a lot of detail, and it's phenomenally how they're expanding. As you can see, they are by far the largest operator of this type of hospital facilities in the country. They've also got an external credit rating of Moody of Baa3, which is investment grade. So from our perspective, we're really dealing with the biggest and the best in this environment. And what we saw from the strategy, and Martin already alluded to it earlier, is that for the inpatient rehabilitation facilities to operate, they have to actually ensure that the patients are treated well and that they're treated in such a way that they don't return, because it's a value outcome-based fee model. So it means that they are paid on performance. It's funny to talk about medical performance, but it actually is one of the good examples where profit and health of persons are completely aligned, meaning that the company do its best possible to give you the best possible treated and still obviously make a profit. And what we've seen from the strategy, they're by far the best cost leader and benchmark for that in this the sector. So from that perspective, we were very happy with that. And I think those that know us from the past, we really look at this single tenant scenario with a lot of earnest, and it took us a bit of time to digest this. As you know, we've been in the medical office block where we like more than one tenant, but in this case, the investment committee clearly felt that the tenant justifies the fact that it's a single tenant with such a credit rating. Now, just a little bit of insights here. What happens in a rehabilitation facility? People are really, after they have had surgery, after they had accidents, they physically have to come there. And from that perspective, it's something that you cannot replace with a cell phone. You can't really replace it with technology, trying to do it over the internet, and hence it's such a good space for us to be. So Justin, I would like to just put you on the spot, maybe bring it a little bit closer to home in South Africa, and how have you experienced it in South Africa, typically these facilities?
Yes, thanks, Machiel. So about 11 years ago, I spent 6 months in one of these facilities in South Africa. And I must say, I remember sitting in a ward of a room of probably about 25 square meters of shared space with 2 other patients, with a bunch of shared facilities, shared physiotherapists, shared social work, etc., etc. And I'm thinking that this is an amazing business, considering that it was costing the medical aid about 40,000 Rand a month. And you booked in there for 6 months, and you go through a rehabilitation process, and it's anything from spinal cord injuries, strokes. That's particularly important for stroke victims. And it is just an incredible business. I mean, when somebody needs that sort of rehabilitation, you cannot send them home because they can't fend for themselves. And you have to deal with them, but you can't deal with them within the hospital environment. It is an incredibly good business, and I wish we could get some shares in Encompass, but I guess we can. It is listed, and it is Baa3 credit rated. So yeah, just personal experience. I think it's just phenomenal how much you can charge a client and then give them a bunch of shared services. I hope that helps, Machiel. While I've got the floor, we have open for Q&A, and I see there's 1 or 2 questions popping up. So please feel free to add your questions while Machiel is speaking on the little chat bot at the bottom. But that's otherwise back to you. Thanks, Machiel.
Yeah, no, thank you, Justin. So also a bit of feedback from us. We've started the due diligence process, obviously, as you know, on this project. And so this operation has been fully operational. They couldn't stop. As Martin alluded, essential service do not stop. So yeah, we had obviously had a little bit of ups and downs to get into this facility, obviously. But nonetheless, the feedback from the operations, it's still fully functional, which obviously bodes well, again, the reason why we're in medical from that perspective. Diving a little bit into the details of the deal, you'll see we're buying it for $37.5 million. What we are purchasing here is obviously the land and the improvement on it. You'll see our partner fees here. They are giving a portion of their balance sheet to us. We've secured this loan here, which is the senior debt loan from Siemens. Siemens is a very large conglomerate that's got a financial arm, And this company, we secured the loan at 3.15%. Phenomenal. Guys, if you remember, just a year ago, we closed on, I think it was Medical 14, if I remember correctly, at almost 5% interest rate. In less than a year, it really moved, so it's changed. And then we are employing the ground lease strategy. I'll talk about that just now. And that brings us to the total amount of equity that we're raising is 9.2. You saw that OrbVest is raising 8.7. That's the culmination of the retail and the corporate products that we offer in this offering. And then the sponsor contribution. A little bit of note on this. The executives of the Lincoln Harris Medical Division, they are collating this 500,000 from their own pocket, and they are personally contributing. So the partner cost on top is really for the balance sheet. And what's nice about investors, for those that doesn't know, you are actually getting a geared investment, and you do not have the incumbent liability on your balance sheet. And that's how we achieve it. I think it's quite a nice add-on for investors because they can effectively now get a geared commercial property in the United States on our platform. And I think that is a really advantage that must not be looked over. So how does it work? We pay a 7% hurdle rate. What does that mean? 7% means that from the distribution of income after we paid the expenses and the debt for the project, the first 7% always go to the investors. If for some reason, and this project, for some reason is most likely never going to happen, if that is below the 7%, we first have to claw that back. And then once it's clawed back and we're still producing above the hurdle rate, then the sponsor and OrbVest share in the fees. And you can see down below is how do we share. This minimum investment amount is 5,000, but to be all honest with you guys, we have now actually managed, Yanni, our lady at the back end, really developed our platform together with Justin, and we are able now to take on investments that's already on the platform from $1. And this amount, I'm pretty sure we can drop it down to about 1,000. From my perspective, only thing why we have originally made it 5,000, just be aware that when you do foreign exchange transfer cost or foreign exchange transfer and transactions, just be aware of that cost. So that was the only reason. Further than that, it's a phenomenal opportunity that you can. If you're a larger investor, we have also a corporate contribution, but our investment consultants will help you with that, if that. But for most people, the retail area is what we're talking about tonight. And let's show you a little bit what is the risks that you can look at. Remember, every investment, doesn't matter how good it looks, has got in risk. And we are in, obviously, a property environment with lots of risk. But what we do at OrbVest is we really look at risk mitigation strategies. And believe me, the investment committee keep me and Andrew and Jacques on our toes with regards to these risks. So first of all, the major risk is obviously that's a single tenant, and he can default on the lease. So from that perspective, the credit rating and the long-term lease in place is really fantastic. We also looked at the Texan law. It's a landlord-friendly state. That basically means that the tenant lease does not contradict the basic law of the state, and it's a very, very strong lease. It's a massive lease, and we've got it under our 4 eyes at the moment, and we're very happy with that. The interest rate risk, yes, it was a phenomenal change in the United States. For those that doesn't know, the 30-year bond rate was virtually at 0 with these stimulus that Martin alluded to. So a lot of investors that normally went out of the stock exchange that goes into bond actually found no place to go, and they're actually coming into property, and hence these type of property offers that we do really helps that. So from that perspective, the interest rate, like always, we fix it. In this case, we fix it at 3.15%, and that's a phenomenal rate. I had the question previously, why is it not at 0 or 1%? Like always, between the the Federal Reserve rate and the actual bank rate, there's a spread, and which is their profit. From a valuation risk, we've basically seen that it's in a fantastic growing area. We had quite a lot of comparable sales that we looked at. It's basically not the cheapest and also not the most expensive, so we're fairly comfortable with the value here. And then the ground lease, for those that don't know a ground lease, it's really at the time of sale, we are selling the ground underneath the building off to a person or a company that's called a ground lessor. They basically gives us the $11.6 million for the ground, and in lieu of that, we have to pay them rent on the ground. So what it effectively means that the net result of this project is that we are actually selling off the income stream of the building of this project, and we call that a leasehold. And why it's so important to do this, we've learned from our other partners that has got decades of experience and that went through 3 GFC type of scenarios, is that a ground lease really helps to reduce the senior debt risk and also help to keep the senior debt bank in check. As you know, if the valuation drop, they can do a capital call. And as you've seen previously, the LTV on this specific senior debt is below 50%, and therefore really reduces that risk. So just another safety measure that we build in with the experience that we've now built up over the last 5-6 years. So how does it look from an investor return? We had a good example suggestion from our colleagues, and people say, okay, show me the money. And this is how we're doing it. If you invest $10,000, that's your cash on cash return. And you'll see we've got 2 sides of this table. The first is the US accredited investors, and that is the investors that has got the LLCs in the United States. It's also for US investors. We are fully accredited with a broker-dealer as part of our platform. So we're fully compliant for any legal situation in the US. And this is the cash flow that you would get. And then, like we alluded to, in this case, the value add is basically made by the virtue that we negotiated both the senior debt and the ground lease to have no escalation, and the rental, the rent is escalating, and so therefore the income of the property increases. And as you know, commercial real estate value is directly proportional to the income it generates, and that's how we actually create this capital gain at the end. The difference between the foreign investor and the US credit investor, the foreign investor, we have a listed share on the stock exchange merge, US investor buying a listed share, and we have very focused know-how to actually translate the income from the US investment to the offshore entity at a very, very tax efficient way. You can see from an income perspective, it's pretty much the same. And then at the end of the project, we have to pay a little bit of withholding tax because the offshore jurisdiction doesn't have a double taxation agreement. But all in all, it really makes, for you as a foreign investor, it's very simple. You don't have to deal with all the foreign exchange regulations like FATCA, etc. from the US. If you're afraid of the United States, you don't have to be. You're also anonymous. We don't have to declare you as an investor into the United States. So a lot of advantages for people that wants exposure to the US but has always been a little bit afraid to gamble personally and open up structures directly in the United States. Obviously, larger investors have their own structures, but that's a topic that we're not addressing here tonight. Our investment consultants are well versed in that. If you fall in that category, please contact them. Yeah, so
if you can just go back to that previous slide. Sorry, I just wanted to comment there. We often get asked a question, and I see one of the people raised it tonight. What are the costs involved to them, or are costs already included? So the beauty of medical ops buildings and this particular building is that it's so transparent and so consistent. The rental income, the expenses, the net profit you generate, like any building anywhere in the world, that our costs are already included in terms of managing the project, etc. So what you see here is pretty much what we generate per building as a PPM document that goes out upfront. And what happens is it discloses exactly what you're going to get. So when we say 8%, for example, you would get your $8,000 on $100,000, and you would probably get that $2,000 per quarter. In this case, it's obviously 8.3. Those are our projections per year, including our fees.
We've got quite a few questions coming up, Machiel. So do you want to just get to the Q&A, and then I'll put them to the panel?
Yeah. We can talk a little bit about the structure. We've got this fairly to a T, and that could be a topic later on. And yeah, just to conclude, I think we are very clear that it's got a solid cash flow, best and largest operator in class Encompass, triple net lease, and we've got a very clear 5-year exit strategy with attractive 5 years or 8 years remaining. Remember, I alluded to that there is still another 2 times 10-year extension over and above the 8 years. So this is really, they're not planning to leave, and that's very attractive for buyers. Yeah, so from that perspective, it's a solid cash flow, defensive deal in these uncertain terms. And we had some very good reaction to this, specifically in this COVID-19 time period.
Great, thank you very much, Machiel. So I'm going to do a few Q&As here, and the first question up tonight is, what are the investment amount? I know that you know, there is some appetite to bring the investment amount down, but it is only $5,000, and you know, to make any sort of meaningful return, $5,000 is makes a lot of sense. And we've made it so low specifically so that you can get into an investment and taste it and feel it, and then we know that you'll come back and build up some courage to do some bigger numbers. I must say that our average investment is considerably higher than that. Martin, if I can ask this one of you, how many projects are OrbVest looking for in 2020?
So in terms of the projects to date, I'll answer it 2 ways. We've done 26 buildings to date. And in terms of this is Medical 27, we at the moment are acquiring a building every quarter. So we are doing a minimum of 5 buildings a year. We see that scaling up to 8 buildings a year over the coming 18 months. People often ask us, is that not a lot of buildings? And we say to them, absolutely not. If you look at all the states, if you look at Texas alone, which is made up of Houston, Dallas, Austin, San Antonio, these are enormous, enormous cities. And so if you spread that over all our partners, it's really just about 1 building per partner, almost per year. So we are in a very luxurious position that we get a lot of deal flow. And so we get to pick and choose. We're not going to do any deal. We'll do the deals that are only right for our investors and that we're comfortable to do. Hope that answers the question.
Great. Staying with you, Mart, quickly, because this is an important one. There is a question here. Is the project in a fund? And in that event, if what happens if sufficient funds aren't raised in order to activate the purchase of the property?
So I'm not sure I ever asked that question, but I thank you for asking that, because we didn't mention the one thing that's fundamentally different with OrbVest. We are not a REIT. We are not a fund. You invest directly in a building. You have direct ownership in the building, and you basically get to be a real estate owner in the United States for only $5,000. So what we do and how we do it is what makes us unique. It's specifically because we felt strongly, and I felt strongly, as did all my partners from the beginning. I don't want to just put my money into a pooled environment in the early days and not knowing what the fees are and how it's going to be managed. I want to choose whether I want building Medical 27 or 29 or 35. And so it's worked incredibly well. So at this stage, it is direct ownership per individual building in the United States. What we encourage all our investors to do is to spread whatever amount it is, no matter whether it's small or big, over a period over 5 or 7 or 8 or 10 investments. And therefore, you build up a healthcare portfolio in the United States, which itself is resilient.
Thanks, Martin. Next one is for you, Machiel. But before we get to that, you will see that we just put up a poll. If you don't mind giving us a bit of an understanding of who's online in terms of what your profile is. we would appreciate that. Thank you very much, and we will give you the results shortly. So, Machiel, a question you have had previously. This is an amazing tenant. It is a credit tenant, Baa3. They have a 13-year lease. It's like taking the check to the bank. Why would the current owner be selling? Thank you, Angus.
Yeah, I think what we have seen in the market is that the large real estate REITs in the United States, they tend to have certain cycles where they actually keep the properties and then they actually are simply recycling their portfolio. And in this specific instance, the seller is a healthcare REIT, and they are recycling this property as part of their portfolio trimmings, as they call it. So from that perspective, that is why they're selling. The second part of your question is quite a good question. Let me just quickly bounce back to that and explain that. You ask, why is there a drop in the cash flow? You can see the first 2 years is in 8.3. We've managed to secure with Siemens that the first 2 years are interest only. And then in the third year, obviously we're starting to pay capital and interest back, at the same time. And then in year 4, we have an escalation on the rentals, and therefore the changes there. So from that perspective, it's purely a function of the underlying interest rates that we have negotiated with the actual banks.
If I can just also add to that, it's quite a phenomenal thing. You've got an absolute gigantic market that is worth $1 trillion in the USA in real estate and in healthcare. And all the players seem to have the same model whereby they acquire and they'll hold for between 5 and 10 years and then they sell. Whether it's to bank their profit, whether it's to just recycle, as Machiel said, their portfolio, they seem to consistently buy, hold, and sell. If you think about most investors internationally, when we first started, most investors actually asked us the same question. Why do we have to go in for 5 years? Can't we go in for a shorter period? But real estate is long-term. And if you want stable real estate to increase over time, given increases and escalations, etc., you need to hold for 5 years. So that's the common way it works in the United States. We haven't spoken, Machiel, about escalations. There's a viewpoint that internationally America does not have inflation. That is incorrect. Escalations in all our leases increase, and generally in our portfolio it sits between 2 to 2.5% per annum.
Yeah, that's a very important point, Martin. Although it can seem small for South African investors, we are used to 8 and 10%. But what's important is the relative amount to the actual interest rate, so to the actual inflation rate. So if you think about it, the vast majority of the last few years, the interest of the inflation rate in the United States was 1.75 and below. That means that if you achieve a 2 or a 2.5% interest rate rental escalation, you are actually moving well above the inflation rate escalation per year in that relative term. So therefore, you're actually creating a real income by virtue of that escalations. So I just want to touch on some additional questions that I think it's fantastic questions is, first of all, are the dividends reinvested every year, or must they be paid out? This is a fantastic question from an investor perspective. One of the key advantages that we offer as OrbVest is that you can get your dividends on a quarterly basis. We've reduced the minimum amount for dividend reinvestment to $1. So it means that every quarter you can reinvest your dividends and therefore compound on the platform so that you have maximum growth, especially if you don't need the income in the initial stages of your capital building phase. So this is typically what we've done in the past. In South Africa, most of you are familiar to the buy-to-let scheme, where we bought, let's call it sectional titles, and then we tried to build up this portfolio. We have just got the equivalent of that on this platform. We've got a geared investment, but we don't have a minimum deposit, and you can simply roll your dividends one after the other. So it's a very effective strategy. So from that perspective, And then Justin, I see there's also, could the dividends increase? And I think I've explained the dividends specifically as its result, net result. We don't manipulate the dividends. It's really just a function what the building pays and what we have to pay towards our debt. So to answer that. And then the last question, a lot of you know that we've spoken a lot about the certificate of needs in the various states of the United States. In Texas, there is not the specific certificates of needs as we know it in Georgia and North Carolina and South Carolina. However, this facility has got a very specialized license that it needs, and the number of beds and the types of functions that you need to do are licensed. So it's a license that you have instead of what we normally term the certificate of needs, but the effect is the same. The barriers to entry is quite high for a new entrant to actually go in there, and therefore from a landlord perspective, it bodes well that we have a sticky tenant that doesn't want to leave, because it's really, first of all, location-wise, it's very difficult to replicate, to get that amount of beds again. And then it's very expensive to obtain it because you have to demonstrate you have got the capabilities and the procedures and the internal systems to actually make sure that you adhere to that license requirement. So it's very similar to a certificate need, but not the same as we know it in Georgia.
Thanks, Machiel. We are now running over time, guys. We are now coming on for an hour, so I'm going to give some snap Q&A just to try and get through some of these others. So let's start with you, Martin. OrbVest share above 7% on income. Do you share the capital gain as well? So perhaps you could just explain what over hurdle means and where the benefits are for the investor in the project.
Absolutely. So the preferred return of 7% means the investors will always get 7%. That's in USD. And then above that, what we do is we share between the investors, ourselves, and our partners in every single deal. So the returns you see here that we disclose are your returns. We absolutely do make money. The good thing about our model is we make very little upfront. We make very little during the project, and the bulk of our money is always aligned to the investor. We need to make sure we all have a successful exit. That's our model.
Great. I'm going to answer this one quickly. Thanks, Hans. Is your investment going into one specific property only, or is it part of ongoing acquisitions? I think this is very important to understand. We acquire only one building, and you invest in that building. The shareholders that invest in that building, the investors in that building, ultimately own that building. That is the building that is listed in its own listed entity in the Seychelles. There was another question from Canada, and Mark, thank you for writing in. I guess it's quite late for you there now, or is it early? We did a webinar the other night, and I know that it was sort of 1 o'clock to 2 o'clock a.m. our time, so and that might be why our slides were a little bit mixed up in the beginning. But I think your question is, as a Canadian investor, do you go in via the US or do you go in via the Seychelles? We have both those options on our platform. And let me just explain to you. Obviously, the Seychelles is an after-tax solution. So there's some very clever structuring that happens in the background, and you've got a lot of flexibility. You can invest a very small amount, and the dividends that you earn in the Seychelles are ultimately post-tax. If you have an entity in the US, like an LLC, then you can invest through the US. You have to be an accredited investor, which means that you have to actually earn over a certain amount. And then obviously that earnings that you get is pre-tax. So you would have to deal with your tax in your LLC or in your personal name if you're investing from that point of view.
Justin, if I can maybe jump in here and say the one thing that makes us also unique is that we over 6 years have created an IP that allows people from pretty much around the world to invest into the properties where we aggregate from, as I said, over 10 countries. So if you are interested, I see there's a lot of people from various countries. That's very exciting for us. We'll put you in touch with the necessary people within our business, and they'll take good care of you. Most of our investors are high net worth individuals, and they've scrutinized us many times over all the years.
Martin, I just want to tackle 2 or 3 pertinent questions which we get from the initial investors, I think from a tax strategy, you can invest pretty much from anywhere in the world. You don't have to be based in South Africa. So in this specific case, the investor, we have effectively two places to invest. If you are US, Canada based, it's really the LLC version in the United States, as we alluded to. But pretty much everywhere else in the world, you're simply buying a share. So it really is very efficient, and you are simply get paid a dividend, both your income and your capital gains, and you are then treated that dividends as per your tax residence country. Then I think the other question that I get quite a lot is there capital gains tax? Yes, there is, but that is part of the project. So remember, what we show you is net of these taxes, and what we've shown you as the foreign and what we've shown as the US investors, these are nets of these taxes. So don't worry about it. You need to simply take your dividend, give the statement of dividends that you will receive from OrbVest in a very professional manner, and supplement that to your income wherever you file your actual tax income, in which country that might be.
But Machiel, it's dividend tax, which is much lower than marginal tax.
Yeah, that is for the foreign investor, and then for the US investor, that's different. But I think we can get into that on the specific investor's situation.
I want to close off just a couple of quickies that we can go through. Once again, certificate of need, Machiel. This is not Georgia, doesn't have one. Do you want to confirm to Bruce?
Yes, no, I've did it already, Justin. It is a licensed hospital, so that's a little bit different, but no certificate of need.
Great. I think considering that most of you are going to go and have your dinner now, maybe we can end off. Please just, if the poll is still in front of you, just complete the poll. It will give us some great insights. If you're looking to invest, we have consultants operating in South Africa. We're allowed to because of our FSCA license, and we can certainly help you through the process. It's much easier than you think. Otherwise, go and look at our website, orbvest.com, and you will be able to work through the process on the website. There is also a chatbot on the side of the website, and if you click on the chatbot, you will be able to talk to somebody on the other end of the line that can help you through the process. Multiple ways to get hold of us and to do the investment. When does the investment close? Perhaps that's one that we need to just cover. You can invest from straight away. It is live at the moment. There is a 60-day period after the end of the due diligence, and the due diligence, we think we can get into the building now, so there's probably 2 weeks or so that we can complete the due diligence. So just to let you know, you've got, there is a 60-day window before we close. Recommendation is rather get in early. We are talking to some bigger investors around the world, so we would suggest that on this particular deal, if you are looking to invest, rather get in early and don't lose out. So anything else from the panel that you'd like to raise before we close off? Let's go to you, Machiel.
No, I think investors, the solution that we're offering you on the platform is really a very easy solution to look at. It's got a very minimum requirement to start. It's really just a question that you focus and have a strategy yourself. It's much, much easier than opening up your own entities and trying to solve this problem for yourself. Remember, all of us are seasoned investors. We've done it for the last 7 years. Really use our know-how, go on the platform, and the simplicity that you see there is really for your use, and the value that we're really adding, make it for you as simple as possible. So use the platform, and the details is really driven by a team of experts at OrbVest.
Thank you very much. And Martin, would you like to wrap for us?
Thanks, Justin. So I want to thank Justin and Machiel for tonight. And I wanted to say to everyone on the webinar tonight, all of us in the business started off exactly like you. We wanted to invest in real estate. We wanted to be part of these great deals. Technology didn't allow it. It was complicated. And then always the question was when, timing. Currencies go up, currencies go down. When do we actually invest? And the one thing we've seen over all the years is you've just got to eventually just get into the game. You've just got to make a small investment and just try it. And we've got an extremely large base around the world of people that when you get in and you see how simple it is and you start earning those dollar dividends, all the excuses you were told by the various other institutions, you can't get these kind of returns, there's always an issue in the world, there's this, there's that, you'll see that it actually is possible. It is simple. Technology has created this ability for small investors to earn exactly what large investors do invest and get returns on. And so I would encourage everyone, if you look at this building and all our other buildings, they're safe and secure. This building in particular, 13-year lease, great tenant. We hold for 5. We sell and we give the next person 8 years to enjoy it. That's our offering, and thank you for attending tonight.
Thank you. Good night.
Thank you.